Welcome to Asian Economy Channel. I'm Antony. The National Bank of Poland recently announced a significant increase in its gold reserves, adding nearly 15 tons in April. This marks the largest increase since June 2019 and elevates Poland to the 22nd position globally in terms of official gold holdings, accounting for approximately 8.5% of the central bank's total reserves. The move by the Polish central bank suggests that the country may be preparing for the restoration of the gold standard or the establishment of a gold-backed digital reserve currency. Simultaneously, an increasing number of U.S. states are recognizing gold as legal tender, abolishing sales taxes on gold, and officially designating it as a form of currency. These developments signify a growing recognition of gold as an alternative to the U.S. dollar. Furthermore, countries like Russia, Iran, and Ghana have announced the adoption of gold or gold-backed digital currency systems to replace the use of the U.S. dollar in oil transactions, demonstrating concrete actions in this regard. Gold-backed digital currencies have the potential to connect more central banks globally and could potentially evolve into a new global reserve currency, bypassing the dollar-based banking system. Just 2 weeks ago, Zimbabwe officially launched a gold-backed digital currency worth $14 million to reduce reliance on the U.S. dollar, utilizing its gold reserves to support the initial offering. Moreover, countries like Brazil, Argentina, and other Latin American nations are also increasing their gold reserves as they prepare for the establishment of a common currency. These developments indicate a reassessment of the role of the U.S. dollar, with central banks worldwide pushing for a greater role for gold in international reserve assets and financial transactions. Apart from Poland, many countries in Europe and emerging markets are fully prepared to restore the gold standard or establish digital currencies backed by strategic resources such as their own currency, gold, and oil. Global central banks are not only increasing their gold reserves but also significantly reducing their holdings of U.S. Treasury bonds. This trend reflects the ongoing process of de-dollarization worldwide, which aligns closely with the actions of gold-buying countries. According to the latest report released by the World Gold Council on May 23rd, central banks globally have been providing a significant boost to the gold market since 2022. Gold reserves have surged to historic highs and have been recognized as valuable strategic assets. Central banks from emerging markets and European countries are the largest buyers of gold. In the first quarter of this year, global central banks' net gold purchases reached 228 tons, the highest level recorded for a quarter. China and Turkey's central banks made notable contributions to this increased demand for gold. China, in particular, has been a major buyer of gold to reduce its exposure to U.S. Treasury bonds. Since November last year, China has publicly announced its gold reserve increases for 6 consecutive months, purchasing a total of 128 tons. This marks the first official announcement of gold reserve increases by the People's Bank of China since September 2019. China's gold demand remains strong, with imports reaching 178 tons in March, resulting in a total import volume of 422 tons in the first quarter, the highest level since 2015, according to the World Gold Council's latest data released on May 20th. Furthermore, at least 6,230 tons of gold have flowed into China from Western markets since 2017. The report updated by the International Monetary Institute on May 21st indicates that gold demand from European central banks remains robust. As of May 1st, 24 central banks in Eastern and Northern Europe made their largest physical gold purchases since the British pound crisis in 1967. The Czech Republic even unexpectedly launched the first ATM in Europe where physical gold can be withdrawn. Since 2022, countries including Germany, France, Hungary, Turkey, the Netherlands, Belgium, Venezuela, Austria, and Switzerland have announced or already initiated the repatriation of their gold held in the U.S. Federal Reserve or the Bank of England. This phenomenon is becoming increasingly evident. According to a previous report by the International Financial News, China currently holds approximately 600 tons of gold reserves at the U.S. Federal Reserve. Due to historical reasons, more than 60 countries have stored around 7,000 tons of gold in the Federal Reserve's underground vault, located at 33 Liberty Street in New York. This situation primarily stems from the impact of the 2008 U.S. subprime mortgage crisis, which prompted countries to accelerate their gold purchases or initiate measures to repatriate overseas gold. In the current context, with many countries seeking to reduce their reliance on the U.S. dollar, the dollar is being questioned. This further accelerates the process of countries accumulating gold or planning to repatriate overseas gold to decrease their dependency on the dollar. However, the Federal Reserve has repeatedly refused or prevented requests from countries such as Germany, China, Venezuela, and Turkey to repatriate their gold. It should be noted that ownership of gold stored in the Federal Reserve's underground vaults is clear, and therefore, to maintain the dollar's status as the primary reserve currency, the Federal Reserve will not allow any security risks to gold. It should be noted that ownership of gold stored in the Federal Reserve's underground vaults is clear, and therefore, to maintain the dollar's status as the primary reserve currency, the Federal Reserve will not allow any security risks to gold. Recently, the Polish central bank announced an increase in its gold reserves and took to Twitter to announce the repatriation of 100 tons of gold bars from overseas vaults, such as the Federal Reserve and the Bank of England, showcasing the country's economic strength. In addition to Poland, several European countries, including Romania, Italy, and France, have joined this initiative in recent months, signaling the latest evidence of global central banks repatriating gold. Disclosures by the French Central Bank indicate that France has repatriated a total of 221 tons of monetary gold from foreign vaults, including the United States, and currently holds these gold reserves in its Paris vault. Central bank purchases or repatriation of gold are not solely for investment purposes, but also signify the return of gold as a stable form of natural currency and reserve wealth in human monetary history. Since the beginning of this year, several U.S. states, including Kansas, Alaska, West Virginia, and Missouri, have officially recognized gold as legal tender, with functions equivalent to the U.S. dollar. West Virginia State Representative Alex Mooney has even submitted a proposal calling for the restoration of the gold standard in the United States. The proposal suggests that the U.S. should exit the debt-based issuance mechanism supported by U.S. Treasury bonds to avoid potential debt defaults and the harm of a banking crisis to the U.S. dollar. This would restore the purchasing power and trust in the dollar. This also explains why an increasing number of Americans are rushing to buy gold and hoard gold coins. In fact, as early as March 10th, when Silicon Valley Bank announced bankruptcy, several economists at the Dutch Central Bank hinted in an article that gold could serve as the foundation for establishing a global currency system to prevent a sudden collapse of the dollar-dominated Anglo-American financial system. From this perspective, when global monetary authorities need to address the rising trust crisis and increasing risk of debt deficits in the U.S. financial system, the role of the U.S. dollar may be redefined. At this point, gold could once again become the trusted anchor foundation for establishing a global digital currency system that operates in parallel with the dollar. Thank you for watching this video. I hope my analytics was useful for you. Like and subscribe, please.